Real-world assets. Now, those are things like private credit, US treasuries, stablecoins, real estate, and other things of value. That could be Pokemon cards, that could be sneakers, that could be hotel reservations, and a lot of other exciting things, which we'll get into this video. And it's been a pumping market over the last year, especially as of recently with BlackRock joining real-world assets. They're investing in it, they're tokenizing real estate, and that just makes it easier for them to trade and for others to invest in. So in this video, we're going to go over my top real-world asset investments in crypto, and obviously I can't tell the future. Right now, I'm invested in it. Things can change in the future, but I'm sharing the investments that I have been holding for the last several months. That is the plan for the next few months, but I'm not a psychic. I'm just a guy on the internet that invests in things that you should not copy, but I want to share what I'm investing in and why, and you could poke holes in it. Maybe this will help you start forming your own opinions, so don't take this as any financial advice. I'm not an expert. Just a guy trying to make it in crypto as an investor. So consider that. There aren't any crypto experts out there. There's just no guarantees when it comes to investing. Now, with that out of the way, let's jump into my top real-world asset investments that I'm holding. And shilling, yeah, I'm clearly shilling. None of this is sponsored, but I'm marking it as a sponsored video because I'm invested in all of these. But first, what are RWAs, or real-world assets, when it comes to cryptocurrency? Now, these are just assets that are tied to real-world value, that they have some type of value that they can potentially be exchanged for or that they represent. Now, these are things like private credit, which is just, personal loans. Those can be things like you taking out a loan on Aave, where you deposit some collateral and you borrow against it, and it's not necessarily Aave, but on a more professional level, those are protocols like Centrifuge, Maple, Goldfinch, Credix, and more. Then you have US treasuries. You can actually invest in T-bills and do that all on chain. You can have that liquidity there, you can earn that interest without those lockup times. And some of the teams with US treasuries are Maker, Ondo Finance, Swarm, and more. Then you have real estate, stocks, and bonds, and those are just other real-world assets. Those are classified as RWAs, just generally boring things. They aren't meme coins. They are tied to some type of value that is very familiar in traditional finance, and that's why I like investing in RWAs, just because there's more substance there that traditional finance can latch onto and potentially invest in or start getting involved with, rather than other projects in cryptocurrency. So 10% of my portfolio is dedicated to real-world assets. And as I mentioned earlier, real-world assets are anything that has value. So we're going to talk about some protocols later that are tokenizing a little bit of everything. And as of the last week, there has been a large trend in real-world assets. Now, there are a lot of different tokens you can invest in, and I'm not endorsing any of these that are on this list visually now, because this is just the list on CoinMarketCap, and you're going to find a lot of risk here, so you kind of want to understand what you're investing in and why. And the reason why the real-world asset market has been pumping is because of BlackRock. BlackRock's $10 trillion tokenization vision, the future of real-world assets. BlackRock announced the launch of its first tokenized fund issued on the Ethereum blockchain, the BlackRock USD Institutional Digital Liquidity Fund. This is the latest progression of our digital asset strategy, said Robert Mitchnick, BlackRock's head of digital assets. We are focused on developing solutions in the digital asset space that help solve real problems for our clients, and we are excited to work with Securitize. Securitize is the platform that is protecting BlackRock's money. They are the ones doing all the security stuff, and they are securitizing it. Now, there isn't any token, and I don't think there's any way for you to invest in them. This is just the platform they are using to do things safely. And I also recommend watching this video by Unchained. They interview one of the people from Securitize, and they explain what BlackRock is going to be doing on the blockchain. And just a light thing on tokenization, that just means you can tokenize something. You can make a digital representation of something. I don't know why I had some inflection on representation, but yes, you can make a digital representation of an asset like this water bottle, and you could say there's 100 tokens that represent one bottle, and we can even fractionize each token to 0.00001, just any amount that you like, where anyone can own a piece of this specific water bottle. So that's just tokenization. And, you do that with things that actually have value, like gold or real estate or Pokemon cards. And yeah, that's tokenization. And now that we have some information about RWAs, let's jump into my top real-world asset portfolio, which is probably not very good, and don't copy it. All right, MasterCard, one of the largest credit card providers out there, aside from Visa and American Express, and they're jumping into blockchain. So they are fostering the next generation of digital assets innovation, and they picked 7 blockchain and digital asset startups to join the MasterCard Global Startup Engagement Program to scale innovation, simplify the movement of decentralized financial assets, and more. That is clunky. That is not a great headline, but yeah, they are working in blockchain, and through the Start Path Blockchain and Digital Assets program, they're supporting startups from around the world that are driving the best-in-class user experiences and expanding use cases that reveal incredible power and technology. All right, not helpful. Just a lot of stuff to really hype you up, but not really in crypto. And this is just a lot of buildup, but, we're talking about Polytrade. So my number one investment is Polytrade. It has performed really well. And initially, they started off doing trade finance or invoice financing for small and medium enterprises, SMEs. So these are these small businesses that need loans against future income to fulfill orders or complete business. They need to complete different things, and sometimes they don't get paid in time, so they need loans against that future income. But since then, Polytrade has shifted to Polytrade 2.0, and they plan on being a marketplace for everything real-world assets related. So they are building up a lot of different partnerships, and they are going to be the RWA marketplace. Now, a lot of this is still in its beta stages, so, they don't have a lot of users or revenue at the moment, and investing now is very speculative. But since this is crypto and everything is built on hype and speculation, that's why I'm holding the trade token for Polytrade. Now, since the shift, there isn't like an official white paper or other news about it, but from the first white paper that I remember reading several years ago, and I did a review on Polytrade at the time, all the tokens I think are unlocked already. There are just some tokens that are still available for additional rewards like staking. So what you can do with the Polytrade token is stake it. And that is still available here. You can see that the APR at the moment is 5.38%. And additionally, they do have a pool on TimeSwap. Now, TimeSwap is another platform that lets you lend and borrow and earn interest. They don't have a token yet, so I'm also using TimeSwap to get a potential airdrop. So Polytrade is still in its early stages, and there is a lot of hype around what they're building. And, with MasterCard backing them up, they're also partnering with a real-world asset chain called Plume Network that we'll get into later. Obviously, there are some risks, but if they do develop the NFT marketplace for RWAs, they could be the OpenSea version of real-world assets. So that's what I'm kind of looking forward to. The market cap is still, at the moment, less than 100 million. And with their partnership with MasterCard and them being a part of this new L2 blockchain called Plume Network that deals with all things RWA related, there can still be a lot of potential growth. Now, things could change in the future. I just want to lay out those risks. Number 2, Swarm Markets. Now, Swarm Markets allows you to trade stocks and bonds, and yeah, those are stock tokens and bond tokens on the Polygon network. And the securities have not been and will not be registered under the U.S. Securities Act of 1933. So these are all just unregistered securities that you are trading online. That is acknowledged. And the problem is, for using this platform, you have to go through KYC. You really just have to prove you are not a US citizen, you do not live in the US. And I think that is the biggest problem in the platform. It's just, it is regulated and you have to go through KYC, but I'm investing in it, and it is again, high risk play, and there are a lot of unknowns to me, like how many people are using it, what kind of revenue are they seeing, and just things like that. And if you do buy the Swarm token, you can stake it for rewards, but you still have to go through KYC. I know, not a great salesman. There are a lot of risks on this platform, and I put in a small amount a while back just because I was trying to make a small market cap play, and it's been performing well. Now, they don't have the type of backers you typically see in crypto. They don't actually mention any. They are registered in Germany to operate, and they kind of operate like a little bit of DeFi and the traditional stock market, where you kind of have these pools that are like balancer that rebalance, and this gives you liquidity for these different trades. So you get a very DeFi type of experience. And you can't see the 24-hour volume here, and it's pretty low besides the first pool of wrapped Ethereum and SMT, which did $81,000 in volume over the last 24 hours. Other markets are kind of dry, like $31, 0, 5,500, $247. So it's a pretty small protocol. Again, not a great salesman, but this is one of the projects I'm investing in. They will issue these tokens, they'll create these liquidity pools, and then it allows people to trade. So there are a lot of risks. There aren't a lot of users at the moment, but one of my smaller plays is Swarm. Again, this isn't sponsored. This is just me degenning into some low market cap coin, and it's turning out pretty good, and I don't really know how much longer I'll be involved unless we start seeing some positive volume and positive news with Swarm Markets. And now that we understand those risks, why am I still investing in Swarm Markets? Well, that's because they make it possible for institutions and traditional finance to get into crypto. Maybe they aren't in the US and they want to invest in stocks or US bonds. They can make that happen. They can tokenize other assets too. So they kind of have the infrastructure to make that happen, even though there isn't a lot of demand yet. Potentially, there could be a lot of demand coming in once people realize that these products are available. So for now, my plan is to continue holding, to watch what they're doing, and potentially start de-risking into other cryptocurrency investments. But I should also mention that Swarm Markets is partnering with Polytrade and other platforms. So MasterCard StartPath member Polytrade moves to 2.0. That's Polytrade 2.0. And they are partnering with protocols such as Ondo Finance, Open Eden, Goldfinch Finance, 4K, Swarm Markets, Pine, Teller, Clearpool, Maple Finance, Unicura, Atlantis, and others. So yeah, most of this video is about a handful of these tokens that I invested in that are Polytrade partners. Which leads us to number 3, Goldfinch Finance. Real yields from real companies, really. And you might have some trauma because it is kind of similar to BlockFi and Celsius, but more on the blockchain side where there is limited risk and, sometimes loans aren't repaid, and we'll get into that. Goldfinch is a decentralized credit protocol that allows for crypto borrowing without crypto collateral. And that's because loans are instead fully collateralized off-chain, so that's in the real world. Now, a core limitation of current decentralized crypto lending protocols is that they require borrowers to over-collateralize their loans with crypto assets, which prevents the vast majority of borrowers in the world from participating. So they're saying that, hey, people want a loan, but they don't have any crypto, but maybe they have a house, maybe they have some funds in the bank, and they can't easily take a loan against that because then they have to sell that for crypto to collateralize their loan. And Goldfinch's solution to this is trust through consensus. The Goldfinch protocol creates a way for borrowers to show credit worthiness based on the collective assessment of other participants rather than based on their crypto assets. Currently, all loans on the protocol are fully collateralized with off-chain assets and income. Jumping into the protocol, you can earn 8.58% by staking your USDC, and you can see that they have an active loss rate of 2.75%, which is relatively low. Loans are getting repaid, which is good. You can see they have 76 million in active loans and $52 million in repayments. Now, RWA.xyz, which I've mentioned previously on this channel on Finding Gems, is great for real-world assets and different data on them. So you can see Maple Finance here, total loans close to 2 billion, the current active loans, average base APY, rewards, cash drag, and just a lot of other data. And scrolling down, we can see some of their investments, that they're invested in the AlmaVest Basket Number 6 Junior, secured US FinTech yield via Stratos, and other different assets. So essentially, Goldfinch makes its money from loaning out funds and through different investments. And just one of the common risks in crypto is sometimes the valuations of a protocol doesn't really match up with the revenue. You can see that they earned $100,000 in the last 30 days, so 1.2 million annually. The interest rate, the active loans, while having a market cap of 129 million. So there is some risk there. As you can see, the valuation is very high, but with the trends in real-world assets right now, with potentially traditional finance jumping in, that's why I'm holding this token. Obviously, with limited risk. You gotta limit your risk. You never go all in on these. Number 4, Maple Finance. Lending markets redefined, where you can start lending, but it's easier to look at the data on RWA.xyz, and we can see from this that Maple has loaned out almost $2 billion, that they have 175 million in active loans, and what they're investing in. So you can see some of their investments, and right now the Celsius WETH pool is open, and I don't know about that one. That one's probably not going to get closed. I kind of just aped in very early, and I just don't want to set up any account. I'm very against KYC and setting up accounts to dig into a platform. Number 5, Ondo Finance. Not my biggest bag, but it's something I'm looking at long term, that I'm going to rotate from my higher risk investments into Ondo just because of what they're building. So they do institutional grade finance on chain. So that just means they help these large institutions invest in things on the blockchain. And yeah, you'd actually need a lot to invest, because if you want to get into the Ondo short-term US government treasuries, you would need to go through KYC, that's Know Your Customer Identity Verification, and the minimum amount is 100,000 USDC. That is to buy the OUSG token. Now this is regulated, but on their unregulated side, they have USDY. It is stable, high quality yield for everyone. And that just means the value of their stablecoin goes up in price as time goes on. So the current price is $1.03, and you get 5% APY for holding this token, current TVL, and available on Ethereum, Mantle, Solana, and Sweet. And then the small disclaimer at the top: the USDY tokens are not being offered or sold and will not be offered or sold in the United States or to US persons. So I guess that isn't for everyone, because they do have that little asterisk. Now the reason why USDY is exciting is because you're holding stablecoins, you're earning interest, and it just makes it a lot easier to extract more value from being involved in crypto. Now, right now, everyone's using USDT or USDC. Yes, you can earn interest on that, but not automatically. So there are extra steps when it comes to that. But if we can start trading against USDY as more DeFi products start to incorporate it, crypto investors are going to earn more yield, and that's good for all DeFi users and investors, except for the companies of USDC and USDT, that's Circle and Tether, because the less people that use their product, the less money they make. And in very recent news, Ondo Finance is investing in BlackRock's BUIDL fund. That's build, but with an L at the end. So they kind of just move that around. It's kind of like HODL, hold, but you put the L at the end because everyone in crypto takes the L at the end. So yeah, there's some deep pain behind that. And what that really means is, the redemptions for their OUSG product have typically taken several business days. But with this new shift, OUSG will soon offer instant investment and redemptions 24/7, 365. So any time of day, you'll be able to invest or redeem it. As part of this evolution, we will also be reallocating a substantial portion of OUSG's assets into the recently announced BlackRock USD Institutional Digital Liquidity Fund, BUIDL. They're also excited to see BlackRock embracing securities tokenization with the launch of BUIDL, especially its broad cooperation with ecosystem participants. So Ondo Finance is investing in BlackRock's success in crypto. Now that we covered the top 5 RWA projects that I'm investing in, let's look at future investments, projects that don't have a token yet, where you might want to get involved with their community early to potentially be rewarded for it. So there is Buk Protocol, BUK, modular infra for all assets that expire, dynamic real-world assets. So that means a lot of things, and more specifically, they are providing enterprise solutions for real-world businesses like Marriott, Hilton, Booking.com, Ticketmaster, Luma, Emirates to introduce groundbreaking innovations into their customer journeys. And this can be very valuable. So a lot of NFT projects make most of their money from royalties, where they get royalties every time the NFT is traded. But what if you can do that with a hotel reservation or an airline ticket? And I'm excited about that, where, the airlines and hotels, they get a royalty, they still make money on the secondary sales, and they still, sell out their hotel, they still sell out the plane, and you aren't left with a hotel room you can't use in case you booked something that has no free cancellation, or an airline ticket where very likely you can't cancel it and you just have to take that loss, but instead you can resell it. And that's the idea behind it: dynamic real-world assets, dynamic NFTs, where you can represent the value of something like a reservation, even though it has an expiration date, through blockchain technology. So that's something I'm looking forward to, and if it is something like Hilton being a partner, I would book, a lot of summer Hilton reservations in popular locations, use my Hilton credit card, get 16x on points because you got the highest annual fee Hilton card, rake in the points, and, I'd sell the reservation at cost or even a little bit lower just because those points are valuable. Now, that's just my mind working in a lot of different ways there, but I am excited to be working with Buk Protocol. I got in on the KOL round, that is Key Opinion Leader, aka content creator, YouTuber, and they do expect some content from me. This is all part of the shilling, but there is no token to buy yet. So if you want to participate and join this community early, it could be rewarding. And the last shill of this video, we've made it a long way. There's a lot of talking here. My camera is overheating. Plume Network. Now, Plume Network is the modular L2 for RWAs, and that just means it is going to be the blockchain that connects all the real-world asset applications. Plume Network is the first modular RWA L2 built to bring any real-world asset on-chain. So they focus on compliance, onboarding, TPS, and you can invest and trade in all the RWAs, from treasuries, art, green energy, whiskey, and more. Specific water bottles by influencers that got it at a convenience store. And with an RWA launcher, you can tokenize any real-world asset, like farts in a jar. That's a real thing, by the way. This girl was on 90 Day Fiancé and mentioned it. She was a bad person in that show. Now, the interesting thing about Plume Network is that they have an extensive partnership with a lot of different real-world asset projects. So you can kind of see this large list here, and one of those is Buk Protocol that I just mentioned, as well as some other projects that, I'm kind of interested in, but haven't really jumped into. And that's the thing about the real-world asset side of crypto, it doesn't get a lot of attention, so it's very hard to find projects that you might be interested in. And that's why having all these different RWAs on one blockchain that makes it easy to access could be pretty valuable. So Plume Network might be something you want to watch if you are interested in real-world assets. You're still here. Wow. Yeah, I know. Kind of lost a lot of steam towards the end of this video trying to record it all at once. You can see the same shirt the entire time. A little tired there, but if this video was helpful, feel free to hit that like button and let me know if there is a deep dive that you are interested in from any of these that I'm investing in. I try to keep it kind of light, but there is always like a lot of information behind things, and when it comes to real world assets, a lot of the warnings overlap with each other where maybe the valuation isn't there yet, but there's a lot of predicted demand if traditional finance starts jumping into crypto. So there is a lot of potential there, but it just isn't actually there. So that's why I'm investing in real world assets. They have performed very well over the last year. Even though it isn't really an exciting sector, it moves at a much slower pace, but I find it very interesting. So if this video was helpful, I already said that. Yeah. All right, I'll catch you next time. That's it. I hope you got your shill value for today.